The U.S. labor market has an interesting mix going on right now. You have hiring leveling off and not adding to what we've seen at the same levels in recent years, but we aren't seeing a lot of people being laid off either. It does seem like we are also seeing a bit of right sizing to a degree for a variety of reasons. So, what does this tell us about the state of the labor market right now? Peter Cappelli is a professor of management and director of the Center for Human Resources at the Wharton School. Peter, great to catch up with you again. Thanks for your time.
Thank you, Dan.
How are you reading the labor market right now and all that we are seeing go on?
It really depends who you're talking to. I've been talking to our MBA students anyway, and from their perspective, it doesn't look great. And I think the reason why, if you look like at the job openings from the BLS data, they're really down for some segments of the economy, and mainly it's down for white collar jobs, especially finance related jobs. It's fallen by about half since last year. If you're in construction, openings are actually up. So, it does seem to depend where you are quite a bit. I think, there is just a ton of uncertainty about how things are going. And businesses hate uncertainty. So, they think they're kind of sitting on the sidelines.
Which I guess then ties into the fact that we aren't seeing more layoffs or more job cuts, is that they're not certain we're going to be bad as an economy, but they're not certain we're going to be great either. And you still
Yeah.
want to have some level of status quo.
Yeah, no, I think that's right. There's also something quirky about the labor market that is important to understand. It's not new. But now, in the current decades or so, when a vacancy occurs, it's much more likely that it's filled by somebody who already has a job someplace else. So that creates what researchers call vacancy chain problems. So, if Dan quits and Peter then takes Dan's job, it creates another vacancy over here. And then somebody takes that person's job, and then bang, 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 bang. You could have a cascade of vacancies and a cascade of job openings, right?
Right.
So when employers start hiring, and creating a new position, it creates in the data several positions over time, right? Because people are moving from one to the other. It's kind of what we used to call frictional unemployment in those days. And then when they stop hiring, then not only is there not their initial job, but there's not that whole chain of vacancies that happen afterwards. So as soon as hiring and creating new positions stops, then it looks like things have really fallen off a cliff compared to the way they were before, right?
And does that also mean that we're also not seeing the level of expansion within companies that maybe we're used to seeing? Companies adding, instead of having 10 people in a segment and maybe raising that to 20 because business is good, they're not even doing that right now.
Right. And that is the big puzzle, right? Because the economy seems to be doing pretty well in the fourth quarter, way better than expected, 4% plus growth rate. And you would think you'd be hiring in that context. And I
Right.
think this is the quirky thing. It doesn't fit usual modeling very well. And that is that business leaders, particularly in corporations, have in the back of their heads a kind of idea about what they should be doing with respect to hiring. And that is driven heavily by investors who really don't like hiring. They really don't like employment costs. They see them as fixed costs, even though you can lay people off and they're actually not fixed. So I think there has been a kind of resetting of their expectations driven by investors who, for some reason, maybe it started in tech, think that companies are overstaffed all over the place.
Right.
And when they start cutting jobs in tech, then everybody else in tech looks around and says, the board say, why aren't we cutting? And then they cut. And then everybody else gets the same pressure. The cuts in white collar jobs are easier to make because you don't see the consequences immediately. If you cut a production worker and a frontline worker,
Yeah.
you don't have people to staff the restaurant, you don't have people to move stuff in the warehouse. You cut a white collar job, people, at least for a little while, try to cover the work, right?
Yeah.
So you can imagine that it's not hurting you as much when you cut white collar jobs, but eventually it turns around and bites you too.
How do you view the question of the impact of AI moving forward. And I'll ask you that from a couple perspectives because recently we saw a company like Dow Chemical cut 4,500 jobs, and they said it directly said it was tied to AI adjustments. Then you
Yeah,
have a company like Amazon that has been cutting over the last couple of years, just announced 16,000.
yeah,
Didn't use the same phraseology, but you got the sense that some of it was probably
right,
tied to that as well.
right. So I think I didn't make up this phrase, but it is attributed to me now, and it's AI washing. And that means that they're claiming it's AI even when it's not AI. And the reason is they're under enormous pressure from investors, in particular, to show that they're using AI because the hope is AI will allow you to cut jobs, cut
Right,
headcount, which immediately jumps your valuations. You look like a much more valuable company when you can cut headcount. So
right,
they felt the pressure to claim they were doing it even when they weren't. There's actually some survey data from this from executives where about a third of them claimed that they were reported anonymously
right,
that they were doing this, that their AI stuff was really performative. It wasn't really doing very much. So there's a lot of claiming it's AI, even when it's probably not. Companies that are a little more honest like this, which includes Amazon, say, if you read what they actually say they expect that the work of the people being cut will be taken over by AI. It hasn't yet, right?
right,
My looking at individual companies and when they introduce AI is that you just don't see headcount dropping. What you see is eventually able to take on more work with the same number of people. Now, you might
right,
think that's the same thing, but it's really not. So, if you think about computer programmers, for example, 30% of their time, only 30%, is writing code. So, let's say AI takes over that whole task. They still got 70% of their time doing other things, which is
right,
talking to clients and people in the organization, figuring out what our needs are, managing their expectations, getting budgets, all that stuff. So if you took that 30% away, you still have 70% of that work that has to be done. So you're not, at least in the short term, cutting any of those people, nor
right.
can you just ram them together and cut one programmer, right?
Well, I guess it brings up an interesting point that you kind of led into before is that there are many businesses out there that maybe are still trying to figure out what their future hiring levels longer term are going to look like
Yeah.
because they don't know exactly how AI is going to impact their productivity and they don't want to make these moves just yet.
Yeah, I think that's a charitable view. I
Okay. All
think the
right.
other view might be that they're just cutting because they feel they have to cut. And for sure, though, I think they're reluctant to staff up now. Part of it might be because they're not sure how AI will play out. But
Right.
I would say more of it is just because of the uncertainty generated largely by the administration, trade policies, federal government contracts, all that kind of stuff. Where's it going? It changes day by day. And if you're a business person, you want to place big bets,
Yeah.
even medium bets, until you have a sense of where that's going. And it hasn't settled down, right? So, not surprisingly, they're sitting on their hands a bit.
So would it be safe to say then, at least maybe in the short term, that we're probably looking at more of the same, like this pattern that we've kind of been in for the last several months, that's going to continue while all of this kind of works itself out?
Yeah, I mean, I think the question is, will it settle down? And it's not clear it's going to settle down, but I think at some point, employers have to decide. We just can't do nothing.
Right.
We just can't keep waiting because it's not gonna settle down. So maybe we have to start placing bets. At the Wharton School and at other institutions with students graduating, we notice this a lot because college graduates take the first hit. The easiest thing to do if you wanna shrink your workforce is to use attrition. That means just
Right.
don't fill vacancies when they pop up. And if you're going to fill positions, the most challenging way to do it is to hire new graduates in and train them. It's a slightly longer term bet than just pulling somebody from someplace else and popping them in. So the hiring that does take place has shrunk down the most, I think, for new college graduates, right?
Peter, always great to get your thoughts and and spend some time with you. I appreciate it. We will talk to you again very soon, sir. Thank you.
Good. Thank you, Dan.
Peter Cappelli, professor of management here at the Wharton School.